Confirmation today that the best-selling car in China, which is the world's largest and most important vehicle market, was the Tesla Model Y. Not the best-selling electric vehicle, the best-selling car, period. Any form of propulsion. This should come as a surprise to approximately 0 people who are regular viewers of this channel or follow the Tesla story closely. But this is quite the feat. This is China, a country in which there are more than 100 companies producing electric vehicles, most of them heavily subsidized by the CCP, many being produced for a fraction the cost of a Tesla Model Y, being sold for a fraction the cost of a Tesla Model Y, in some cases like a third the cost, missing a lot of the features, especially safety-related stuff. Yet somehow, a vehicle being sold for 2 to 3 times what the heavily subsidized loss-making competition within China is being sold is still outselling everything, not just electric vehicles, all vehicles, period. Amazing stuff. I mean, if I didn't know any better, I'd think this was an incredible product that nobody can compete with. And just a quick reminder for those who aren't aware or have already forgotten, Tesla's just refreshed the Model Y for the Asia Pacific region. First deliveries of the refreshed, even better, almost the exact same price, but much better product, Model Y, a couple of months away. And it's already the best-selling car in China. Not bad. Continuing this theme of Tesla's dominance, Tesla officially overtaking Audi in global vehicle sales for the first time ever. This isn't so much due to enormous year-over-year growth in Tesla deliveries, but Audi vehicle sales collapsing. Down 12% year-over-year, which may not sound like a lot, but try a 12% decline for 5 years running and see where you end up. Not looking good for legacy automotive manufacturers. By the way, Audi, the same company who literally called one of their vehicles the Audi turd. Yeah, remember? If you don't, well, you're going to think, what the fuck's he talking about? But if you know, you know. Turns out when you make turds, you try and compete against Tesla, this happens. And as Farzad points out here, Audi sells over 30 different vehicle models. Tesla sells 5. As I've said in the past, complexity appeals to stupid people. And stupid people are the same people who hear a company say, we're going to have 52 versions of our electric vehicles and 600 variations by 2020, whatever, and think that's a positive sign. You morons. Much better to make one category killer per category. This is why Apple doesn't have 600,000 different iPhones. You have an extremely compelling product per category, and you can produce it for a low cost. Relative to the value it offers, you win. I thought this really put things in perspective. Vehicles sold in 2024, Tesla 1.79 million, Audi 1.67 million. 10 years prior, Audi sold 1.74 million, Tesla less than 32,000. Now before we get to the really big news of the day relating to Tesla, I just thought I'd share this. Extremely deranged, left-hearted money managers in California are currently in shambles. NVIDIA, from the official account on X, directly calling out the incompetent, inept, super corrupt Biden administration. Let's just read this. P.S. So much for the Elon's opinions are destroying Tesla narrative. Where did all those morons go again? Check this out. Quote, the Biden administration's AI diffusion rule will stifle innovation and undermine America's global technology leadership, restricting access to mainstream computing risks, derailing AI progress for industries at home and abroad. Wait, did NVIDIA just imply that the Biden administration, a decision that they've made, will derail progress in the US and abroad? They did. They're right. But this is kind of a recurring theme with this absolutely inept, incompetent, corrupt administration. They continue. America's strength lies in innovation and competition. This rule will only harm the US economy, keeping in line with the last 4 years, set America back, likewise, and play into the hands of US adversaries. I mean, they could literally be described in the last 4 years, just saying. By the way, I mean, for real, shots fired. And I saw this. It wasn't just this statement. Let's read the quote and then the full context. NVIDIA publicly supporting the first Trump administration and criticizing Biden's administration for their impact on AI is a hell of a vibe shift. This appears to be a capture from the NVIDIA website. A statement. Quote, the first Trump administration laid the foundation for America's current strength and success in AI, fostering an environment where US industry could compete and win on merit without compromising national security. As a result, mainstream AI has become an integral part of every new application, driving economic growth, promoting US interests, and ensuring American leadership in cutting-edge technology. This is high praise for the 2016 to 2020 Trump admin. Today, companies, startups, and universities around the world are tapping mainstream AI to advance healthcare, agriculture, manufacturing, blah, blah. Yeah, we know. Cool story, bro. It's everywhere. Great. Driving economic growth and unlocking the potential of nations. Skip ahead a little bit on the exact same statement. This is incredible to read. In its last days in office, the Biden administration seeks to undermine America's leadership. I mean, bro, this is literally a perfect description of the last 4 years. With a 200-plus page regulatory morass drafted in secret and without proper legislative review. This sweeping overreach, imagine accusing the Biden admin of overreach, would impose bureaucratic control over how America's leading semiconductors, computers, systems, and even software are designed and marketed globally. Wait for it, it gets better. And by attempting to rig market outcomes and stifle competition, the lifeblood of innovation, the Biden administration's new rule threatens to squander America's hard-won technological advantage. So, shots fucking fired. Congrats to NVIDIA for having the balls to say what needed to be said. To call out this insanity, tell you what, the vibe shift is complete. And it seems pretty clear to me the Biden admin is doing absolutely everything they possibly can to leave Orange men bad, an absolute burning dumpster fire to deal with on day one. Thank fuck this abomination of an administration is just days away from being a distant memory and an entry under how to fuck everything up in the history books. Now, back to Tesla. Morgan Stanley's Adam Jonas has raised his Tesla price target to $430, which was previously $400, on Robotaxi and shared mobility bullishness. Tesla remains a top pick for them, and their bull case price target is now, wait for it, $800 per share. And it just so happens that somebody posted the full note here on X, so let's read that. Quote, as interest in autonomous vehicles continues to rise, we have undertaken the most extensive re-architecture and expansion of our Tesla mobility Robotaxi model since initially published in 2015. While autos, as in car sales, still matter, we see embodied AI as a driver for upside to a revised $800 per share bull case for Tesla stock. And they reiterate Tesla stock being their top pick. So before we get any further, I just want to do a quick gut check. Keeping in mind that historically, Wall Street analysts, most of those publishing research in fact, have been completely off the mark to the downside on Tesla. Even some of the more bullish estimates in the fullness of time appearing to be quite bearish. Now, I'm often accused of being a deluded Tesla fanboy. Maybe it's true, but I'll tell you what, that delusion's done well for me so far. But I just wanted to do a quick gut check and have a look at my own estimates for Tesla's fair valuation, not just in my base case, but also the bull case. And the reason for doing so would be to ascertain as to whether or not Morgan Stanley and I have some comparable assumptions around Tesla's valuation in an upside scenario. Because if they're pretty similar, I'm probably not as deluded as I hope. Let's have a look. My Patreon supporters are welcome to dig up the most recent Tesla valuation model and have a look for themselves. First sheet, E7, bam. And what do you know? My bull case and the Morgan Stanley bull case are less than 10% from one another. By the way, if you guys want access to the Tesla valuation model, click the link in the pinned comment, join Patreon at the investor level and above. Everyone can see the fair valuations, which include this bull case, but if you want to see the numbers behind that, which is kind of what matters, you need to be at the investor level and above. Now, I do want to point something out here. I have not touched this model, intentionally not touched it, since July 2024. The reason is no new meaningful information has arisen in that time. Despite Tesla's We Robot Autonomy event, all the estimates they unveiled there for cents per mile over long term, right in line with my own estimates. So I didn't need to change anything. So just to be clear, when Tesla stock was, I call it like $200 a share, give or take, 250, 300, didn't make any fucking changes. It remains untouched. And in fact, just prior to the end of 2024, Tesla's stock just surpassed my bull case for the year. Total coincidence, right? Meanwhile, every analyst on Wall Street was chasing after the stock. And now I find myself in the awkward situation. Better late than never, by the way, Morgan Stanley. After they've actually done some more thinking about mobility and Robotaxi, that we clearly have some similar thought processes happening behind the scenes on our upside scenario because we've arrived at a very similar number. So let's read the rest of this note. Investors increasingly acknowledge the relevance of embodied AI in a highly competitive and complex geopolitical environment. In our view, Tesla's recent share price appreciation has begun to discount the expanding surface area between Tesla and physical AI, including the company's natural advantages in terms of data collection, aka Tesla's unassailable data lead. I think I've heard that somewhere before. Robotics, energy storage, AI and compute, manufacturing and supporting infrastructure, including the benefits of working across Elon Musk's other companies, SpaceX, XAI, etc. However, we still see scope for 2025 to be a year where the market's appreciation for Tesla's unique combination of skills can be further reflected in the multiple, offsetting the relatively well-known challenges to the 2025 EV market. So, translating the jargon here a little bit, Morgan Stanley are making a prediction not so much about Tesla's actual underlying value as a company, but the way investors model that value, particularly the multiple awarded to Tesla. And this is the biggest driver of my Tesla valuation. I have a very high multiple relative to what most of these so-called experts and analysts use for Tesla, because I'm looking out a decade plus into the future and seeing stupendous sustained rates of growth specifically around Tesla's profits. What Morgan Stanley seem to be suggesting here is that perhaps 2025 is the year that many looking at Tesla and trying to value Tesla let go of the Tesla's just a car company plus a little bit of possibility in the future about autonomy and go, oh fuck, actually they're one of the world's leading AI companies, and value accordingly. As we look ahead to 2025 and beyond, we expect to see Tesla's total addressable market aperture further expand to broader domains, many of which are still not included in buy-side or sell-side financial models for the company. And they're basically referring specifically to the humanoid robot, robotaxi fares, and so on. Accordingly, we have revisited and expanded the assumptions in our network services and Tesla Mobility autonomous rideshare models to provide a framework for investors to help value these existing and nascent industries of embodied AI where we believe Tesla has established a material competitive advantage. For years, we've tried to focus investor attention on the potential for Tesla's leadership in EV hardware, which are semi-autonomous electric robots, to convert vehicle owners into subscribers, generating highly recurring and high-margin revenue. AKA, for years, they've tried to tell investors that Tesla's not, in fact, just a car company. While Tesla has had some modicum of success on this front to date, we believe recent advancements in AI and autonomous vehicles, they note Waymo now represents more than 1 in 5 rideshare trips in San Francisco, combined with Elon Musk's place of influence within the Trump administration, are helping to accelerate investor attention on the greater than 1 billion miles travelled per day we forecast Tesla will achieve from its global vehicle fleet by 2030. Now, let's take a pause. This is good. They've shared an important estimate, a long-term estimate from 2030, about miles driven per day in Tesla vehicles. Now, let's ignore the number of these miles that are fully autonomous in Tesla robotaxis versus customer driven. Let's take this number 1 billion and just do some hypothetical exploration. What if, on average, each of these billion miles, more than 1 billion miles, traveled per day in 2030 in Tesla's fleet? What if, on average, each of those miles brought in, let's say, 50 cents of profit? Now, you can use your own numbers, right? They're not all going to be autonomous miles. Some of them will be Tesla-owned vehicles, some customer-owned vehicles autonomous, and some will be driven by customers. But it's a nice round number. It's pretty reasonable. Average Uber or Lyft today is a couple of dollars per mile. Tesla's going to have much lower costs. So achieving an average 50 cent per mile profit on all miles driven, which also includes customer-driven miles, you're not taking anything, but on average, you're probably maybe making $1 per mile or 60 cents, 70 cents for the robotaxis. Where do we end up? That would be $500 million. Pretty easy math, right? Per day. So what's $500 million per day over an entire year? Little under $200 billion in profits. Now, I'm not saying these numbers are going to happen, but what I am doing is illustrating the point that Morgan Stanley are getting at here. If Tesla were to come even close to these kind of numbers, surely the company would justify an enormous multiple. Back to the note. The scale and complexity of the data. The collective global light vehicle fleet travels a distance of nearly 2 light years annually, combined with stringent automotive safety requirements and Elon's ability to spearhead the development of such standards in autonomous vehicles, make the global mobility market and Tesla uniquely a relevant expression of the embodied AI investment theme, aka Tesla is not just a car company. Morgan Stanley also, right? We initially introduced Tesla Mobility, shared autonomy, into our Tesla valuation nearly a decade ago. If you would like to see our updated Tesla Mobility model to run scenarios, please reach out to your Morgan Stanley sales representative. So feel free, guys, if you've got a little bit of money to spare and want to have a look, get in touch with them. We raise our price target to $430, up from $400 previously, driven by increases in our mobility and network services valuations, and partially offset by a decrease in our third-party battery business valuation. Our revised bull case moves to $800 per share, and the bear case, $200. Importantly, we note that both our revised price target and bull case do not give Tesla credit for any other form factors of embodied AI, such as Optimus humanoid robots. I sense a shift in perceptions around Tesla starting to take place among analysts. Now, I do need to admit I am obviously an extremely deluded Tesla fanboy with absolutely unrealistic expectations about the company and its future. An extremely deluded fanboy whose untouched fair valuation for Tesla for 2024, published back in July when the stock was around $200 per share, had a bull case for the stock of $483 per share. Tesla stock late in 2024 exceeding that, just a few dollars, $488.54 price. When that was first published in July, a lot of people thought, 483, bro, you're high. And hey, I wasn't saying that's the stock's going to be worth that. I'm just saying fair valuation in the upside scenario, if this, that's where it lands. And as I record this, the stock's still in the 400s. The question I want to ask is, what if Morgan Stanley and or that dickhead with 3 first names, the deluded Tesla fanboy you're currently hearing from, have done a reasonable job of estimating Tesla's fair valuation in the bull case scenario? What if the stock does get around that $800 per share level in 2025? I can tell you one thing. If that does take place, The stock would only need to roughly triple from there to reach ARK's 2029 fair valuation of $2,600 per share, which, when they first published earlier in 2024, if I recall, the stock would have needed to increase about 16 or 17 times to reach that level. Want more content? Early access? A bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs. This is what viewers of the channel had to say after trying AG1. I feel like I have a lot more energy since I started on AG1. Just got my AG1 in the mail. Legit feeling the effects after day 3. 3 months ago, I started AG1 and have been enjoying the evenness of alertness and energy that lasts the day. I just started the wife on it too. Are you convinced yet? I mean, hey, it's worth trying, right? Click the link in the pinned comment or head to drinkag1.com/SMR, or I can keep going. This viewer, after about a month on AG1, definitely a lack of fatigue in the afternoon. Pleasant side effect is that my coffee intake has imploded and is almost down to 0. One more? Yeah, why not? I honestly feel younger and will be continuing to use AG1. This stuff really is crazy good. I didn't think it would be, but this stuff is awesome. It really is what everyone is saying. One more? Don't mind if I do. I've just received my 3rd month supply. I've drank it every day. I have so much energy throughout most of the day. I'm productive, started a new business, started socializing, refurbished a boat. It's no coincidence. Thank you for your persistence, your integrity, and your insights. Now look, these are not my words. These are not my testimonials. This is what you guys and girls are saying. Maybe it's 100% placebo effect. But even if that's the case, I think it's money well spent. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.